I like data, I like analytics, and I like Bitcoin. And if you are the same, you might have heard of Plan B. Plan B built several mathematical models to predict the Bitcoin price. And he recently came out with another video, of course, predicting the potential price movements in this year, in 2024. I want to discuss those models because I find it very interesting how much attention those models get, and I disagree with most of them. I want to give a commentary to this video. I will play the video and give my comments at the same time.
Welcome back to Plan B on YouTube. Today we talk about my 2024 prediction based on 7 charts. And the first chart is the stock to flow model. This chart basically gives us 3 pointers for prediction. First is the model value. Model value for after the halving, and thus also for the year 2024, is $532,000. And the other thing that we can learn from this chart is that every time there's a halving, when the model jumps in 2012, 16, 20, and 24 again, and when the color jumps from blue to red, that Bitcoin price is touching the model value. And the model value at the moment is between 50 and 60,000. So I think that in the next 4 months towards the halving, we will start to see Bitcoin rise even further towards the 50, 60,000 region. And the third thing we can see is that price is not immediately rising after the halving, but has a little bit of a lag, right? It's the main feature of the stock to flow model is that the halvings double the scarcity, the stock to flow ratio, and that price pumps as well. But we see that usually takes a little bit of time. So I expect after the halving, not an immediate pump to the 532K, but a slow pump, maybe well into 2025 when we see that model value $532,000.
Now, the video by Plan B assumes that you already know the basics of the stock to flow model to a degree. I want to give a quick summary. The idea is that scarcity of an asset and its price is linked, as in the less new supply of an asset hits the market every year, the higher the price should be. The price prediction is a direct derivative of the supply change each year. Now, where does this 500,000 prediction come from? Plan B looked at different assets, for example, gold and silver and other assets, and he looked at how much of that thing hits the market every year. What's the flow? And he looked at the market cap of those assets. And he then had a logarithmic regression with market cap and new issuance, and he saw a pretty nice line across this. The rarer the asset was, the less new supply hit the market, the higher the market cap was. It was a very, very nice linear line on a logarithmic scale on the y-axis. Now, this sounds like a totally reasonable thing to do, but the problem is this model breaks quite a bit. Of course, the new supply of Bitcoin gets cut in half every 4 years, and thus the implied price should go up. But the problem is, for a lot of other cryptocurrencies, we've got even negative new supply. Ethereum didn't have any net issuance whatsoever. It had a shrinking supply. That would then imply that the market cap of Ethereum should be way, way higher, or maybe even infinity, right? So my doubt here is, why is Ethereum's market cap not larger than Bitcoin's, given that the new supply tokenomics are so much better? Another concern potentially is that this model has to break at some point, right? It has to break because you can't always 10x the price every 4 years. At some point, it will simply just be too much capital to be locked up in a single asset. So could Bitcoin at some point hit 500,000? Yes, it's possible. It could even be possible that it happens in the next year, but I'm not sure if that's because of the halving only. I'm not sure if that's because there's less supply. The change in additional supply is very, very small because we've already halved that often. What really drives the price here is demand. We should look at demand instead. Let's continue with the next model.
Second chart is the Bitcoin market cycle model. And this is not a prediction chart, more like a detection model that gives us an idea in which phase we are. And we're now in the accumulation phase. which is exactly where Bitcoin should be, where we expect it to be. And the next phase is the bull market. So we're just waiting for the red dot, and it's very irregular, the cycles. So you have accumulation, then a bull market, then distribution, then a bear market, and then people start buying again, accumulate again, bull market, start selling, distribution, bear market, and now, like I said, just waiting for the red dot. And what happens when the red dots come, they used to give a 100x in the first couple of bull markets, but lately that has slowed down a little bit to 10x, a little bit under 10x. I don't expect diminishing returns because we're at 2 or 3% adoption, and if we follow the logistic S-curve and Metcalfe's law, we can't have diminishing returns below 50% adoption. So we'll have exponential growth for a couple more years. I expect a nice 10x. That brings us somewhere in this area, which is consistent with the stock to flow model.
Okay, I don't know the mathematics behind this chart, but there are several things to note here. The first thing is that the sequence of those colors is not always the same. We had red, yellow, red, yellow. Over here as well, red, yellow, red. We've never seen green, blue, green, but who says that this couldn't happen in the future? So it's definitely not a fail-proof model. Now, my main gripe though with what has been said is that Bitcoin doesn't have any diminishing returns anymore because there's only 3% adoption, and you should be expecting diminishing returns after we've hit 50% adoption. Now, how do we measure the adoption rate? Not everybody in the world needs Bitcoin, and Bitcoin obviously is not yet a widespread payment mechanism, but Bitcoin is being used as a savings vehicle. How many people though use Bitcoin for saving? How many people in general save money? Most people don't have money to save. And the ones that do have some money to spare, they might not be able to use directly Bitcoin on chain because of the high transaction fees. Thus, you only have a subset of savers that can maybe dollar cost average in with like $200 or $300 per month, which is not the entire world. Of course, that can be mitigated with the Lightning Network, but the Lightning Network capacity hasn't grown in the last year, for example. I very much do expect diminishing returns in Bitcoin. I will sell quite a lot of my Bitcoin once we get pretty close to the 100K again. If you're waiting for the 500K price to sell some of your Bitcoin, you might not find a good exit. And I say this as a person that has called the YouTube channel Bitcoin Strategy. I am bullish on Bitcoin, but I try to be realistic. And all measures show us diminishing returns in Bitcoin already. Even Plan B talked about this, right? We first got our 100x returns in a bull market, then our 10x, now less than 10x. Who says that this is not going to continue, that returns are continuing to diminish? I think that's the most likely scenario if we are really realistic.
The third chart is a technical analysis chart, a relative strength index, RSI. RSI shows momentum over bought situations and over sold situations. This is greed, this is fear, bull market, bear market, greed, fear, and it's like the tides. So we just had a bear market, and we're going into a bull market now. Mind you, everything above 50, so that's most of Bitcoin's history, is a uptrend. Everything below 50 is a downtrend. So only the bear markets are below 50, and we just had that. We're going into a bull market, and so there's two things we can draw from this chart, in my opinion. One is that the next 4 months towards the halving is in an uptrend situation. So we will see a slow rise into the halving from the current 43,000, which will bring it probably in the 50,000-60,000 range at the halving, which is consistent with the stock to flow model. And after the halving, then we go into the red dots, the really high RSI values, and that's a steep uptrend. we don't know from this chart how high that will go.
Here's the problem with crypto YouTube. People promoting becoming degen or buying 100x coins. That's what gives clicks, but that's not what's going to bring you forward. I refuse to take money from centralized exchanges. I refuse to take money from crypto projects. I refuse to pump and dump a coin and filling up my pockets in the background. I don't do any of this. Instead, I share my knowledge in the form of tutorials in the premium membership. So that's content that won't do well on YouTube, but that builds up skill over time. You can also directly contact me over there. You can directly pick my brain. Feel free to check it out. TheBitcoinStrategy.com is the link. The RSI can be a useful measure. I use it for shorter time periods when there's a massive crash to then potentially buy bottoms. I don't use it to time cycles. Now here's the problem with the usage of the RSI here. The RSI measures the pace of price changes relative to prior price changes. So when we are price changing very fast, like we are rising very, very fast, then the RSI is high. When we are crashing very, very fast, then the RSI is low. If we are crashing rather slowly, then the RSI will not get low values. Now my big question is, why are we only relying on price data to determine those waves, those ups and downs in the waves? Why don't we look at on-chain data? Why don't we look at, for example, what are the long-term holders doing? Are the long-term holders that don't sell usually, are they currently selling? Maybe that's a good top signal. I've done several videos on that topic, on on-chain analytics of Bitcoin, and I think that's way, way more precise than simply just looking at the rate of price change. Because again, the rate of price change also might change. As returns for Bitcoin diminish, so will likely also volatility. Another problematic statement was that Plan B is expecting now a rise. But look at what happened here in 2019. The RSI was even higher and then went down. This here was the Corona crash. Bitcoin during this move went down by 70%. So this top over here to this bottom over here was in the price a 70% drop. I'm not saying that this will happen again, but it is a possibility, right? There is no certainty whatsoever that we are simply just going straight up from here. Don't get me the wrong way. I very much like the work that Plan B is doing, and it also was some inspiration for this channel to analyze the blockchain in a bit more depth, to have some kind of analytical approach to crypto. That being said, we always have to be critical, and what I'm trying to do is constructive criticism to hopefully spark some kind of constructive debate as well. Let's continue to the next model.
Next chart, also technical analysis. It's a moving average, simple moving average chart, 200 weeks, so about 4 years. Always goes up, and what we see is that the halvings are like 2x or 50% above this line. 200-week moving average now is 30,000, so that would bring the halving at 45 to 60,000, again in the same range as the stock to flow model and the RSI indicator. And after that, there comes the red dots, the bull market, which brings Bitcoin in this 100k to a million area, which is a wide band, but still, it's a very nice return and a prediction. It's okay to be roughly right and not exactly wrong.
This is a model I very much like. The realized price shows where is the market in aggregate at. When the current price is above the realized price, then the market in aggregate is in profit. When it's below the realized price, then the market in aggregate is in losses. Now, why is this good? Because it shows whenever the market in aggregate is in losses, that probably the sell pressure will somewhat slow down. Because a lot of people still believe that Bitcoin over the long term will outperform everything else because it's got better tokenomics, right? It inflates less than fiat, for example. So if you're currently in losses with your Bitcoin, you can simply just wait it out. However, if the market as a whole is in profit, that can potentially be bad. And when it's very massively in profit, it can be even worse. Now this chart is useful, but there are better representations of it. For example, here it looks like during the Corona crash, we did not go below the realized price. But when you go to lookintobitcoin.com, you can actually see that we did go temporarily below the realized price. Currently, the realized price is at 22,000. So the market as a whole is already 2x in profit. So I'm not necessarily certain that we are going up from here, but I think this is a good gauge of how far Bitcoin could potentially, in the worst case, fall. If 22K is currently the bottom for the realized price, and we can maybe fall a little bit below this, maybe 30, 40%, then that's the absolute bottom where Bitcoin is really a very nice investment. So for example, over here, the realized price was at 4,600, the actual price was at 3,200. So maybe at 15,000 or so, we will have an absolute bottom in Bitcoin in the very worst case. I wouldn't wait for that price, but I would get mentally prepared that that's in the end the risk you're taking by buying Bitcoin today. There is a probability, even though not massive, that Bitcoin can drop another 50% from here, maybe even more. Now, why does the realized price go sideways during bear markets and go upwards during bull markets? The reason for that is simply because not so many Bitcoin move hands in a bear market. Everybody gets excited about Bitcoin, and this is when the realized price updates. So Bitcoin moves from long-term holders to short-term holders. The average cost basis for all of the Bitcoin holders is going up, but as the price is going down, liquidity also tends to go down. So there are way less transactions being done in a bear market, making the realized price relatively stable. Let's continue with another model.
Talking about Bitcoin in profit, we see yellow dot here. That means yellow-orange dot, actually, that almost 90% of all the Bitcoins, all the 19.5 on-chain Bitcoins are in profit. The only ones in loss are the people that bought at the top in 2021. And the pattern, of course, is if there's yellow, the red will follow. So it's red, bull market, blue for the bear market, then red, blue, red, blue, red, blue. So we get red again. And so we're waiting for the red, but we know when it's yellow, then the red will follow. And it's a very interesting sign.
Unfortunately, this is too simplistic in my opinion. Have a look at this. We were yellow over here, but then turned green. Sometimes when we become red, we directly turn around again, right? This again was the Corona crash time. I actually made an analysis on this once. I looked at the supply in profit relative to the future returns, and the correlation was very, very small. So you cannot necessarily infer future performance from past performance, except when past performance was extremely negative. Then we tend to have, at least in Bitcoin's history, very positive returns afterwards. But positive returns are not that well correlated with either further positive returns or negative returns. So even though this looks pretty in charts, the patterns can change. As for example also happened with the last double top, right? The Bitcoin double top. We went to 60K and then 69K. We never had this before. We went up and straight down. We went up and straight down. We never went up, a little bit down and then up again. So really, I think this is a relatively weak model. The realized price, in my opinion, is a much, much better model, especially for timing the bottoms. If you want to time the tops as well, there is a bit more of an advanced model as well. That's the market value to realized value Z-score. So this looks at the current price relative to the realized price. This time the realized price is in blue. And it takes that delta, so how much is the market currently in profit, and it takes this into relationship to the current volatility. So volatility being a measure of how erratic the price currently moves, right? High volatility means a lot of ups and downs. Low volatility means a rather calm market. So we look at how much is the market currently in profit relative to the dynamics of the market. Here we can see how those orange tops somewhat align. Not perfectly, but somewhat. And we don't seem to be yet very high relative to the realized price given the current volatility. So I do agree with Plan B here that we've got a lot of potential upside, but I come to this with a very different approach. Next model. Hope you're getting value out of this, by the way. If yes, feel free to give this a like because it helps the channel grow.
Then the last chart. So if we follow the stock to flow model and all the other charts that basically confirm the stock to flow model, then the halvings are very significant and all the Bitcoin increases in price are around the halvings. And we can make a trading rule. We can make a trading rule like buy 6 months before the halving and sell 18 months after the halving. So you'll be in the market 2 years, out of the market also 2 years in a 4-year cycle. And we see that from in the purple line here, that around the halvings you follow the Bitcoin price and then you go out of the market and you stay flat because you're in a cash position, and then just before the halving you enter the market again. Well, this pattern entered the market the 1st of November, so we have 2 months of return already, a plus 22% return. So it's very interesting to see what the next 4 months towards the halving will bring. And then, of course, the 18 months after the halving, where we expect all the increase in price. And so very interesting to see if this trading rule still holds. My money is on it, but of course you should make your own informed decision, do your own research. This is not financial advice, and of course I can be wrong.
I have a problem with that trading rule because it worked retrospectively, but who knows if it will work in the future. And the reason for this is because I believe that the significance of the halving event gets reduced over time. Price is a result of demand versus supply. But if supply only barely changes, then the price is really massively just influenced by the demand itself. We currently have a Bitcoin inflation of 1.74% per annum, and this will be cut in half. So in 4 to 5 months from now, we will have an inflation of 0.87%. Will a change of a bit less than 1% over an entire year really move the price that much? I am not so sure. It only moves the price if it becomes a self-fulfilling prophecy, if a lot of people buy in because they believe in this. But just from a pure tokenomics perspective, it doesn't make much of a difference. We have seen this in Ethereum, right? Ethereum moved from proof of work to proof of stake. It reduced its inflation to a similar degree, even more than that, right? It moved from plus 1.7% or so to minus 0.2. So 2 percentage points change per annum in the supply, and still Ethereum underperformed the rest of crypto since that merge. I'm a Bitcoin bull because I see Bitcoin being spread across more and more wallets. It gets more and more adoption. I think it's super important to get into this next bull run with realistic expectations. And if you're waiting for the 500,000 Bitcoin in a year, then very likely you're going to get disappointed. If it's your first time here, feel free to subscribe. I publish videos regularly. Again, a like would be very much appreciated. It helps the channel grow. There's also a free Telegram. Link is down below.